So today we're joined again by Bryan Falchuk, the author of Future of Insurance, the host of the Future of Insurance podcast, and the CEO of PLRB. Bryan, thanks for joining us again. How are you doing?
Yeah, I'm doing well. Thanks for having me back on. I may have overstayed my welcome doing this too much.
Not at all, not at all. I think this is perhaps third appearance on the Making Risk Flow podcast, which I believe is a record, but very well deserved from our perspective. So yeah, thank you for joining us again. I won't kind of ask you to dig too much into your background as we have on previous episodes, but perhaps just give us a real quick insight into the future of insurance and PLRB and kind of how that pertains to your experience, if you could.
Yeah, I'm a 25, 26-year veteran of the primarily P&C space. I always look around at the rest of insurance, but I focus on P&C. Worked at carriers, consulting, and then sort of been spending the past few years focused on trying to push the industry forward through conversations like this, things I have in the book and the podcast and whatnot that are really sort of using case studies of who's doing what lessons can we take from that, and how do we move forward? And you can't have those conversations without also thinking about the challenges we face or will face and the opportunities that are arising. So I really just spend my time kind of playing in all the things that are brewing in our industry and where that might take us if we sort of have an open mind. And that ties to my work at PLRB. We're a trade organization of the industry in the U.S., very focused on claims. And so I spend a lot of my time with our members talking about, what issues they face and how we as an organization can support them in, sort of dealing with that at the coalface of claims.
Great, thank you. Yeah, and I mean, a lot of things you mentioned there really play into the discussion that I'd like to have today. We're thinking a lot about how do we use AI, agentic AI, to improve existing processes, but I think that perhaps misses the point and the degree of technological advancement that agentic AI introduces. And the question really should be, how do we rebuild our processes so they're built around this technology and they can really benefit from it? So I guess to feed into that conversation a little bit and paint the picture of why there's a necessary reframing there. What are the consistent systemic challenges that you see carriers experiencing when it comes to complex commercial underwriting and even claims, but then on from that, pricing and quoting workflows?
Yeah. I mean, I think there have been a lot of really amazing advancements from a technology standpoint. I mean, we probably always feel that way. And we probably always feel like we're not doing enough or implementing enough or we're struggling. But I do think certainly, like, from COVID forward, COVID forced a lot of CX or customer experience changes by necessity because we couldn't do things the way we did because everyone was now dispersed and couldn't see each other. And unlike some industries, we actually held on to a lot of those improvements, which is great. But coming out of that, then we had the AI boom. And so there were a lot more new ways of thinking about solving really complicated, painful pieces of the process. And, Cytora is one of those examples. There are plenty of others that looked at very specific problems in a niche that I come from specialty lines most recently, so I care about it more. But like that commercial and specialty space is largely underserved because it tends to be sort of subscale, yet highly profitable and very interesting businesses. And so there hasn't been, the big bang kind of development providers or solution providers haven't focused on it because each one of those customers was too small. But we then had the ability to have these really kind of laser focused, impactful solutions in bits and pieces of the process that have a real impact. And I don't say bits and pieces to downplay it, but it's all very like point specific and separated out. And it got a lot easier to plug those together. APIs and a lot of core systems have been moving to the cloud, and carriers have been moving in that direction too, which makes it easier. But it's still these like sort of locked off components of benefit in different pockets of how we work, whether that's in underwriting, or I should say even prospecting and interacting with our agents and brokers, through to the underwriting and securing that business, renewing, et cetera. But then over on the claim side, the service side, you had these bits of innovation in those functional pockets, in sub pockets within them, rather than sort of rethinking how is it that we operate more holistically. And I feel like we're knocking on the door of needing to reckon with that, rethinking the total kind of interaction layer, if you will, with our customer base.
Yeah, absolutely. And so I guess it all still stems from, by nature, there is friction in underwriting workflows just by how the industry trades, and the way that's historically been solved has done a good job of it in the past, but there's a new paradigm now that can kind of more effectively solve that friction. It just requires a reframing and a bit of a ground up kind of, I guess, attitude and willingness to attack things ground up.
Yeah. I mean, I think when you talk about ground up and you're talking about attitude, there's an underlying, there are a few underlying sort of operating principles within insurance that I think for many of us are subconscious. We talk about being risk averse, which makes a lot of sense. And people are like, well, you buy risk, so don't you love it? And no, on the contrary, we buy risk, but then we box it in and we have very specific, policy terms and definitions around that. And we have sublimits and coverage parts and reinsurance and all these things to try to take some of that unknown and uncertainty out of the risk so we can get more comfortable with it. But we are a risk averse industry as a whole and as people. And that's, I think we all know that and we accept that and we try to work through that. The other thing that I don't think we're as in touch with is that we are trained to be highly iterative in our thinking. And if you look at the way the product cycle and the regulatory cycle has trained us, it is very iterative. You put a product into the market or into your regulators for approval. Obviously, this varies dramatically by market and line of business, whether you're excess and surplus or admitted, whatever. But the fact remains, we put a product out and then we iterate on it. And we may do a complete rewrite of it and it's a whole new product, but it's actually still an iteration of the GL product we had before or the lawyer's professional liability product we had before. Even if we've rewritten it, it's fundamentally still the same thing. We've just evolved it. And it's that evolution or iteration is at the heart. Every year, the regulators put in some new regs that touch that product or the way we operate. And so we iterate and we make the system changes around that. And we don't tend to blow up any of that paradigm, whether it's our systems, our products, the way we operate, because everything in the different pieces of the business are hitting this iteration cycle. So it's very difficult to think past that and see what if we were to clean sheet this and rethink the entire way we work with that. Oh, but every 3 months we have to do this thing over here. So well, we have to build an iteration cycle around that. Oh, but then there's this other node that touches that also it's on a 6 month cycle and we need an iterative flow for that. So you're sort of forced back into this iteration mindset. And I think the tools that are coming to market now and are available in our daily lives, they have an ability to break free of that because they can solve for the iterative, sort of external pressures, whether it's a regulator or market reporting or what have you, while also allowing us to rethink the way that we exist within our business that isn't sort of chained down by that iteration cycle that we have had to adhere to externally.
Yeah, yeah. I mean, I totally agree with that. I think it's a case of overcoming the initial inertia, really, isn't it? It feels like a big task, and I imagine we'll cover some of this later in our conversation. But it feels like a huge task to overcome. But if you approach that initial inertia, the benefits are huge. So yeah, I guess thinking about the challenges that we've discussed and the challenges imposed by that iterative nature of insurance, they've been kind of quite pervasive. And while insurance is undoubtedly making progress, it's been incremental. It's often not happening at the pace required to maintain sustainable growth and competitive growth. And it seems that a reason for this, well, as we've discussed, is the general approach to solving challenges, retrofitting existing systems and processes with automation solutions rather than fundamentally rebuilding processes for more deeper and integrated automation. So could you speak to what this means in practice for carriers and the lens through which they should be looking at their current and future technology stacks?
Yeah, I mean, I think it does boil down to we talk about core systems. So it's like, what's at the core of how you operate? And it comes back to your core system, whether that's a set of functional core systems, an underwriting workbench, a claims workbench, the finance side. If you have a service piece that's outside of that, often it sits within the underwriting workbench. Or it's more of a holistic core that has the functional components to it. we still have that at the heart of what we do when we think in those terms. We think in a file. And I've said to you before, like a lot of the earlier workbenches looked like files, and they had like tabs on the top that looked like the tops of file folders in a drawer. This is, I mean, right back to that sort of core mentality. Like, this is how we're wired, and we've worked that way for decades. And when we rebuild systems, we generally rebuild them to work the way we've been working. We have an ability to do something different now and to not be as bound by those structures, which inherently block us off from seeing beyond what's in that file, or even worse, on that specific screen that we're on, or that issue that has come to us. The broker called with X request. And so we are thinking just about that and not, what did we see from this prospect? Another interaction that we had with them recently, like, what could that tell us about how we're going to respond to the broker? Well, I'm not looking at that, so that's not on my mind. AI is very good at pulling all that together, regardless of where it sits. And that's a sort of abstraction up a level to more of a data layer that sits across the entire piece, regardless of what you use to transact on a daily basis. But I think if you're able to operate more in data and information, and have your decisions and your actions flow from that, the notion of having to have like a virtual representation of a file folder um, becomes less and less necessary. But for the sort of framing that we put in our mind, it's like, well, I have to go into something to work on it. Do you? Can you not go work on a quote and have that AI understand what components need to come together to bring that quote together and then send it out? Did you have to go through a series of screens in a traditional workflow? Or could you not interact with the actual decision points that you need to engage in? That's just not how we've ever worked, but that doesn't mean that isn't how we should think about working. And that's very much an underwriting point, but it's the same is true in claims, in billing, and really anything. Even just, I used to run a distribution team. Like, how are we interacting with our brokers? And how are we thinking about those relationships? Well, I have to go and pull this report over here and then dump this data into Excel because that didn't work right. And why? Why can't we just interact with the knowledge we have across that full relationship to have the details we need to understand how should I be showing up when I go to see this broker right now to talk about how the business is doing and what opportunities we might have with them, and where we need to focus that, which is very hard to do if you're just sort of going through a series of disparate reports in different systems and file folders.
hmm Yeah, and I think your examples there have really kind of begun to paint a picture of the challenges that are introduced by I guess, the legacy way of approaching these issues. Um, to pick one of them as an example, so carriers, they've got an unprecedented breadth and volume of data at their fingertips nowadays. It can all be used as levers for underwriting processes, and that sounds great on the surface, but in a world where every industry, but particularly insurance, needs to do more with less, I wonder where those automation processes fall flat. Like, how can insurance practically derive value from expansive and sophisticated new data sources in a scalable and efficient manner without undermining the value that this data creates?
Yeah. Well, so those traditional approaches, if you want to take in third-party data, for example, you need to know exactly what the data fields are and the ranges of possibilities for the data within those items. And you need to know exactly how you're going to use them and what signal you're looking for and what actions or decisions will come out of that signal. So everything really has to be predefined. um, you're completely missing the opportunity to catch the real signal that's going on. You're only catching what you were able to come up with, or maybe you had a model that helped you decide that. But it's powerful and valuable, but still ultimately limiting. And it's based on a set point in time, and the world changes. So, an example I use frequently in conversations like this is I don't know what exists in the UK, but I know in the US, a lot of restaurants are running on a platform called Toast. And maybe they're global. I have no idea. Toast, if you can tap into that data, would tell you exactly how many tops were served that night, how many plates, how much alcohol was served, who was working, all of these different details. And the flexibility and complexity behind that data is such that you really can't design screens in an underwriting platform to capture all that, or a claims platform, or where would you even put that? Because unless you're at the moment of transaction, there's no need for that data. And a restaurant is probably too small of a risk for you to have like a risk management relationship with them where you're capturing a stream of risk data. But even still, I don't know a carrier who would know what to do with that, or would have the capacity to tap into that sort of constant real-time flow of information. I had a restaurant that we were on risk for that had no liquor license. The bar next door to them, the owners wanted to retire, sold it to his buddy who owned the restaurant. And so midway through the policy year, they took on a liquor license and the liability that comes with that. And there was a sexual harassment claim between a bartender and a waitress at the bar. And so we're reading the details of the claim and we see something about bartender and we're thinking, well, are they just sort of like making soda and juice and water requests, fulfilling those? And then we see more about alcohol service and at the bar. And it's like, well, if you have no liquor license, you don't have a bar. You would just have the filling of the basic non-alcoholic drinks at the table. So things weren't adding up. Well, if we had that data stream, obviously there was like misrepresentation and they didn't tell us mid-year and the broker failed. There were all kinds of issues with that claim. But if we had the data flow from Toast, we would have suddenly seen like 7 margaritas at this table. Well, that doesn't make any sense. They have no liquor license. Um, we could have done something with that. Doesn't mean we would have canceled them, but like we could have engaged with an underwriting moment to increase coverage, change the policy. We would have been proactive. Wouldn't the broker have loved that versus what we ended up having, which was quite a mess of a claim? And then, is it covered? Is it not covered? Or whose E&O is coming into play here? It was not a happy scene. I don't know how we could have possibly done anything with that data if we had the flow. Even if we had, a much more modern system, that is the kind of thing that deliberately says like you need a different approach to working with all of the various data fields and all of the signal that's coming out of them, because you can't design enough structured and unstructured fields in a traditional system to know what to do with that kind of data stream. And that's one example. What about commercial trucking? These things are out there on the road all the time, all sorts of sensors and cameras. I don't care how good you are at building systems. You will never build a core system that will have the fields and the actions to come out of those fields to make sense of thousands of drivers logging thousands of miles every day with genuinely like terabytes of information flow that much of it is worthless, but not all of it. And you probably don't know what is and isn't worth something. And it may be the interaction between those data points that you never foresaw when you were designing, well, here are the 17 pieces of information we're going to get from that data stream. Unless there's a claim, then we want these other ones. You can't think through that. That is exactly why we need to rethink this.
Yeah, yeah. No, I mean, that makes it super clear. And not only is some of that data kind of not useful until it intersects with other data, some of it's just not useful until you very specifically need it. But in a lot of cases, you won't. So you need to be able to receive and interpret that data without overfacing your kind of internal experts with it to, I mean, completely exhaust all of their time if you expose them to that much data. And we see a lot of carriers nowadays looking at tools like underwriting workbenches to try and accept all of that data. And these workbenches might have some fairly good kind of included automation tools, but it's not what they've been built around. They're not in a position to truly orchestrate all of that data with the approach they currently take. I think as we've been covering, there's a reframing that's needed there, in that you need a specific orchestration tool that comes in the form of real kind of deeply integrated agentic AI that then perhaps passes those signals and those outcomes into various downstream systems.
I think that's really well said. It's that word orchestration, I think, is the critical one here. Is all of these solutions, which again are great and they're steps forward from where you've been, no doubt. But they are iterations on that, and they will still exist in the constraints that are inherent in this kind of approach, where it is sort of closed into a file, the file you're working on, not even last year's version of it often. unless we go into the prior year or we have a little window that tells us, something about the prior losses or rates or what have you, we're not even bringing up the past information. And I've talked to some CEOs and CEOs and say, "Oh yeah, we have all that. And we have the past claims, we have this, we have that. We have the data on how many tables were served or what have you in the past year." I said, "No, you don't. You have PDFs or Excel spreadsheets with that sitting in the file. And it's not to say you don't have access to it, but unless a person opens it up and chooses to do something with it, nothing happens. And the next step is we'll have an agentic AI do something with that schedule of properties that comes in via Excel and transact, if you will, within the system, but it's still within that file. So like, yes, that's a step forward, but it's a step forward within a closed ecosystem sort of that one file that you're in. And it's maybe that's a vision of the benefit that could come if we broadened our perspective. But we are talking about that as the real benefit actually is across the book and across the interactions you're having every day.
Mm-hmm. Yeah, I think it certainly is a vision of what's possible. And the interesting point is like I imagine everyone listening can see the benefit of and the challenges behind handling that amount of data and turning it from just a pool of data that you have into data that's useful and is kind of actually deployed into reality. But we've not even touched on processes yet. So this compounds the more you kind of think about it. And the modern commercial insurance ecosystem, it requires handling kind of immense complexity. It means carriers often rely on multiple core systems and specialized ancillary solutions, like external rating and pricing tools. They all need to work seamlessly together. So, why do you think that an all-in-one workbench is maybe often the wrong tool for orchestrating these steps rather than data points? And why does compromising on the capabilities within a single workbench fail to generate the benefits that carriers are seeking? Should a workbench perhaps be viewed as a data recipient then rather than an orchestrator?
Yeah, I mean, I don't know many people who love working in their workbench. Um, and if you look at how these implementations go, generally they are really just rebuilding the way we worked before. So, the new core system project comes in and there's no intention of customization. And invariably it ends up being customization heavy because people want it to work the way that they've always worked. And when you start gathering requirements or you do user testing, they revolt and they, I can't work like this, or I'm going to quit if I have to use this system because it doesn't work the way I need it to work. Need is not the same thing as how I've always. And that's the problem is we're human beings. We believe that we need to do things in this way for the outcome to come to be. And that's very natural and normal, but also extremely limiting. And it's part of why these system projects are as painful as they have been over the years. And when I see carriers who step away from that, it does go better, but they're still difficult. But even still, we end up with a system that is built to work a certain way, whether that's the right way or not. And I don't know what right means, but it's also been built at a point in time and things change. And like COVID's a fantastic example of that. It's a terrible thing, but a really good example at just how quickly and dramatically things can change and how people work and what data looks like. And I mean, if we're talking about commercial lines, the jobs people do. The great financial crisis was hugely disruptive to the kinds of work people do because they lost their work. And you saw it in pockets where I was at a specialty writer at the time, and our miscellaneous professional liability product, suddenly almost everything was coming in our like 99 other class of business category because we had no categories for what people were having to turn to make a living. So that's a case of like, well, we spent $100 million in 6 years on this core system and it's built for these things. And then there's some exogenous shock and suddenly it can't work in that new paradigm or it doesn't work well. And we're probably going to sit with it for another 10 or 15 years. And so, even if it's on the cloud and we're taking regular updates, we're going to be with that system for a while. And it is defined by a point in time that may no longer be as relevant as it was. And that becomes painful when you divorce yourself from having to fit into that kind of structure. the possibilities of flexing as you see new risks emerge, as you see new opportunities emerge, because that's what new risks are for our industry. You can suddenly respond to them very differently. And that includes all of this data flow wherever there might be signal in that. Being able to sort that out is very, very hard in a traditional model.
Yeah, yeah. I mean, all totally resonates with what we're seeing in the carrier world, and I mean, it makes sense on I guess, a human evolutionary basis that we err towards that. This is how we need to do things because this is how we've always done it. It makes sense for, I don't know, cooking meat or hunting and gathering and surviving on a biological basis, but it doesn't change the fact that technology is a whole different beast. It doesn't evolve over tens of thousands of years. What we're seeing at the moment is evolution that's significant year on year, and so we need to actively try and change our thinking to respond to that, rather than what we've kind of meta highlights the point, rather than responding the way we always have. So thinking about that, then talking about change from the norms and change from what we're used to and how we've historically done things. If we project maybe 5 to 10 years out, and these highly flexible AI automation tools have successfully leapfrogged our existing ways of thinking and legacy workbenches to eliminate manual processing, what, in your view, does the day-to-day role of the commercial underwriter and even claims handler actually look like?
So, this is I was going to say $1 million question, but I think it's worth significantly more than that. I've just come back from a conference. Like, this is the conversation at every event is employment, whether that's we have too many people retiring, what do we do? Or, what's the role of the future for the adjuster, the underwriter, et cetera. And I think there is one, it will be quite different. And I think it's probably aligned to the current crop of students and young professionals who are coming up in terms of their mature ability to think in commercial ways. They're coming up with these tools in the midst, just like the mobile first generation, right? Like, for people who grew up with a desktop computer, let alone a laptop, pre-internet, to then have mobile devices with high-speed Wi-Fi and cellular everywhere, is a major shift. But if you've never known the old approach, you may think of totally new ways of using that technology and not feel as it's second nature, right? You're not sitting there like, oh, and now I have to take this out and use this app and do this. It's just the way you live. And that may sound like a stupid example because not everyone, but many, many people just feel that way about their mobile device now. They may resent it, but it's just a part of how they live. But I think there's even more of an integration when it's wired into your life from the start. I think that's the case for the next generation of talent. So they will view these tools and the interactions and the possibilities with them quite differently from those of us who came up in the workbench era. Which is the entirety of insurance, really, since even the green screens and the early computerization of the industry, certainly since like the 70s. I was not in insurance in the 70s. I'm not quite that old, but effectively it looks the same today as it did then. It's much prettier looking, but the notion behind it is the same notion. So if you've never worked in old school file folders and thought of things that way, actually it would kind of break your thinking to go back to that. So if you can pull that forward, I don't think a 20-year-old who becomes a successful underwriter will say, oh, AI destroyed my job. I think what they believe the job to be and the possibilities for them, the ways they would interact with their brokers or the risks in front of them or the portfolio that they're overseeing, because maybe they are sort of stepping up a level and acting more across the piece and less in a specific risk on a day-to-day basis, or kind of every 20 minutes I have a different file in front of me, or hour and 20 minutes, whatever, based on the complexity. I don't think it's going to be as much of a shift for them, and they will see that my intelligence and my strategic thinking is coming to bear on this business in these ways. I don't think they would bemoan the loss of like, oh, I got to put in all this information and do the import from the third party systems and then look at that and click to rate it and, go back to the broker with the options and make the changes that they ask for. Like, I don't think that that's really what the job is about, but that's what it's had to be. I think it would allow them to be more risk professionals, if you will, to be more consultative and probably add more value to how to protect that risk and respond to it as it changes over time. I mean, that's the thing is we think in like when you're sold or when you renew. So that's a once in a year interaction. What if that was not? What if that was an ongoing dynamic relationship with the risk? Um, you can't do that at scale until you get to the larger size risks, the more like risk managed kind of lines of business and accounts. But what if you could do that more because of the tools at your disposal that allow you to see that signal? And in some of them, you're not doing anything other than providing the guidance behind the system, but the system is the one that's outreaching to that, local restaurant to do something different with their business or give them a bit of insight that helps them to operate better and safer. Um, it's a very different business than what we've traditionally done in, a $12,000 BOP account or whatever it is. Like it's a different world. Maybe that's hard for some folks to see because it is so different. I totally get that. But I think it's also not, I think it's pretty hard for us to say that it's not going to move in that direction. And if we want to exist and be competitive for risks and for the talent to work on those risks, we need to think about what we look like in that paradigm as well.
Yeah, no, I mean, I totally agree. And I think, as you say, with the kind of generational shift, that it's always ongoing, but there's probably more of a significant one upcoming. To a degree, this will happen naturally. Like the new underwriters and claims handlers coming in, they will be used to this way of working. But then I think that introduces the real moment of inertia to overcome transfers from the underwriters, the claims handlers, the experts onto leadership and transformation. I think that's where the biggest opportunity for a reframing of thinking is, so they can ensure that the new talent coming in is empowered with the tools it needs to be able to make those moves. And one of the things I think there is that that's quite a scary prospect for those people. Again, insurance is risk averse, and those people are responsible for transformation and generating results with new processes. So it rides on them, really. So when a commercial carrier hears the advice that we're giving, essentially, to fundamentally rebuild their processes rather than retrofit legacy systems, the immediate fear that they have is that they're signing up for a multi-year transformation project. How does modern agentic AI actually solve its own implementation hurdle? Could you explain how the very technology that drives the advanced automation we're talking about actually allows insurers to reduce their deployment times and see measurable ROI in weeks rather than years?
Well, I mean, I think there's two different mechanisms for that. One is, and I mean, we hear this on the regular around vibe coding and the Gen AI coding solutions that you can spin up an app much faster. And it doesn't have to be an app. You can spin up a insert technology project and outcome much faster by getting the help in the process. So in general, these things are easier to deploy in the same way that APIs are, orders of magnitude easier to implement than the traditional integrations that we had to do that, a lot of hard coding between systems that do not talk and do not want to talk to each other. Now there's more openness to do that. It's not to say there isn't a lot of work, but PLRB has a series of APIs. One of our members, I wouldn't say accidentally, but they stumbled upon our API repository before we had actually turned it on and implemented it. Within about an hour, one of their devs did it over lunch. And then we just started to see usage of the API and we didn't know why. And when we talked to them, they're like, oh yeah, it was really easy. We saw the documentation, we just put it in and you had the code and the secret there. And so we could use it. That's like unheard of in connecting systems from, I mean, got a 75-year-old not-for-profit trade organization. Like you wouldn't think that that would be like an easy thing to connect to the tech of, but it was. That's the API world. Well, AI takes us a step, another order of magnitude beyond that. So the tools themselves assist in using the tools themselves, if that sounds a bit meta or weird. But the other side of it is it's not like it, and I had this conversation on my show recently with someone who has a lot of experience in the space, and I was saying, a lot of carriers looked at the move from on-prem to the cloud as this massive, expensive, hard thing to do. They had to do it, or they still have to do it. Some of them still haven't. But that's like a multi-year, extremely painful. A lot of data is lost and problematic, and so I think they're living with the scars of that. Just like when we first, had web-enabled technology, it was another like extremely painful move from client server or server-based interactions to web-based. So they're probably thinking with the same framing. This is quite different because you may not actually have to do that. So this like abstracted data layer and the interaction of the tools, it doesn't inherently mean you can't still have the underlying architecture or tools that you have. It just means you may not be interacting with them. So you may still have a record of risk in that same core system. But that just doesn't mean that's what the underwriters are working in every day, because that's irrelevant to their actual work. They're interacting with the information and the decisioning through whatever the right interaction tools are for that. And there are going to be different ones in different contexts, I'm sure. But you still, for regulatory reasons and reporting reasons and financial reasons, do you need to have a record of risk? Yeah, you probably do. What conception that takes up or how that interacts in your systems, I think becomes less and less relevant. So maybe you are still living with the same ultimate core system that has the same limited data fields, but actually they're sufficient for your stat reporting or your filings, or when the state comes in and does a market conduct review, or whatever it might be. So maybe we don't have to go through that same painful moving from this to that. It's moving with this to that. And so we're not disrupting in the same way. And I know several instances, and there's some providers who this is all they do is AI to sort of sit between AS400 in some cases, like really old existing legacy database systems on old school servers that are still up and running at many carriers, to allow them to then use newer tools in the day-to-day without having to do that painful, like true migration and the level of disruption that comes with that, which for a lot of carriers is probably like they feel like that's an existential threat if they actually try to do that. So AI, both, in the API analogy, like it's much easier to deploy than things we've tried to deploy in the past. And it doesn't have to be a rip and replace per se. That might be the right answer, but it's not inherently the only answer, in the way that like going from on-prem to the cloud. I know there were hybrid solutions and whatnot, but effectively, like, either your data sits in this data center that you own in this location and you have people running those servers, or it sits in the cloud with Amazon or Google or Microsoft or whoever, and you're managing it quite differently. Or, it's through your core system provider who has a cloud offering, whatever it is. You can't do both of those things. You have to pick a path and then make that move. I don't know that you inherently have to do that today.
Thinking about it that way should alleviate a lot of those concerns. Like the possibilities of AI and agentic AI have just changed the way we should not only approach the very specific topic we're talking about, but also how you approach that topic. Like the approach to the approach changes. I think the other concern when it comes to thinking about AI and agentic AI as a solution is where regulation comes into it. And you've mentioned this a couple of times. So in a highly regulated industry like insurance, there's understandably some hesitancy around adopting advanced automation due to compliance, auditing, data privacy. How does utilizing vertically integrated AI actually lead to better regulatory compliance and safer human review? And then from something you mentioned earlier, the whole iterative approach that's driven by regulation, how is this a better solution to approach that as well?
Yeah. So, I think this is a tricky one for a few different reasons. And one of them is the regulators have not given, at least in the US, have not given clarity. Not on the data privacy side, that's always evolving, but there are some pretty clear, like, this is okay and this is not, around PII and other things. But there's rough senses of guidance, and there's words that are being used that have not been used before in regulation, like ethics and fair, without defining them, or being ethical and fair. And that's where I think a number of carriers have really had a pause, is we don't know if we just, we spend X tens of millions of dollars and we're going to have to shut it all down, or we're going to have these huge fines because we're now in violation of something that we didn't even know we were going to be regulated by. That's again, risk aversion, but that's a very scary place to be. I literally was just on a panel around this, and there was a modern TPA, born in the last few years, the founder of it, very like they're tech first, very heavy use of AI, and he just said, we're very comfortable with doing something and then being told, okay, these are the rules, and now you have to comply with them, and so we'll change, and they can change really fast. He's not worried about that. Whether he should be or shouldn't be is, that's a subjective question, but I think that's a fair way to look at it. Is we don't necessarily know what the rules are. What they've done is tried to build in flexibility so they can respond. They've also made sure from the start that they're building in explainability. So when there's a decision being taken, whether it's by a person or by AI, you need to be able to explain that. And that has led to certain choices of which AI they use or don't use, or the way it gets implemented, because this one they can explain and that one they can't. Well, then they need to go down the path of explainability and repeatability and understanding why something can't be repeated if it isn't. So those are all, I think, pretty fair baseline considerations that everyone can put into place to be able to start to move forward. And the thing with AI is, if you go forward and then there's a reg change, you can guide it differently. So if suddenly you have to, use the crossing between privacy and AI and the regulations around both of them, if suddenly this piece of data cannot be transmitted outside of the organization, I'm thinking when GDPR was put into place, and suddenly, we had to redact all kinds of things that normally we would have sent via email or given access to our systems to our outside counsel who was advising on something, or whatever, or even just emailed between our US and UK counterparts. Here's the data on this block of claims to feed into our quarterly results. Well, we had to start redacting things because we were crossing geographies. That's something you could tell the AI to do. So to comply actually might be easier when you have the AI in place, because you can give it different guidance and it will learn from that. Otherwise, that was a 7-month project that IT had to go back into the code and write new rules to do things. Well, you don't have to do that if you had agentic AI solving for that data transmission in particular. So it may actually make it easier to keep up with the iterative cycle that has defined us and allow us to actually break free of that mentality, because we're not having to deal with it actually. We get the new reg and we may not even have to tell it. We could feed it directly into the AI. It could have access to that regulatory. There are data providers who share those regulations. The AI could solve for that without us having to go back to, like, every 3 months, we have this change that we have to make on our motor insurance product in this geography, because that's the cycle that the regulators give us. We could actually become free of that iterative kind of thinking.
Mm-hmm. It's funny, as you're talking, there's light bulbs going off in my head, and I spend each day of my working life exposed to agentic AI and seeing the incredible things it's capable of. But I'll still never not be impressed by what it can do with a bit of imagination. Like, it really is incredible, and I think what you've covered during this conversation should offer a kind of real level of clarity for our listeners in terms of how to think about this when it comes to what do we need to do to adapt and be successful versus competition? What's possible to achieve from an imagination standpoint, and why it should be approached that way? So, I mean, we usually end these podcasts with a question of what would you change and why about the insurance industry. But given we've had a conversation recently, I'm going to slightly adapt that. So, if you could give one single piece of advice to a commercial insurance carrier that's looking to ground up their manual workflows and the processes they have nowadays, modernize their systems, and build something new with today's technology in mind, what would that piece of advice be?
So you may not like this, or at least your listeners may not, but actually it's not going to be a piece of technology or do this one thing. It's a starting point. It's a building block. And actually it hits at what you actually were just saying around being able to imagine and sort of freeing your thinking. And that's do some real design thinking training for your entire staff. And I really mean your entire staff, everyone in that business unit, if not the whole company, in whatever role they're in, genuinely engage them in design thinking training because it's critical. It moves you from we can't because to how might we. And there really is no path forward in any of this if your starting point is, oh, we can't do this because of X, because you've already said no before you've even explored it. X may be a very valid constraint, but if you say we can't because, you'll never find a way around it or even realize if it's still relevant. If you say, okay, I acknowledge the existence of whatever that constraint is and it's real and it is stopping us, but what if it wasn't there? How might we do this? What you do then is you actually explore the possibility, and your cost benefit case in we can't because is whatever the cost is, $10 million. And the benefit is zero because you've said no before you've even dreamed of what is possible. When you take the how might we approach, the cost is still 10 million, but now you've actually seen why you would go forward with this and what the savings could be or what the business expansion could be or the increase in broker productivity or underwriter productivity with their brokers and the quality of the book. Now there's a benefits case. And what you might find is, okay, now we understand it's a 10-to-1 ROI. We should go forward even with that constraint because it's worth finding a solution for it. Or what you might find is actually that's not constraining us at all. We were thinking about it wrong. And in doing that exploration, we discovered a way around, there's a door next to that constraint that we just never saw was there because we kept saying no. That's what design thinking ultimately teaches an organization to do. I've used it in my organization. I've seen many carriers implement it, and it really can reshape your culture. If you don't do that, it's very hard to engage in the conversation that we've had today and the possibility of where it's going. And I would imagine for people who feel like this guy Brian's nuts, like whether they're right or wrong, if you're thinking that way, it's probably because you're lacking that sort of that growth mindset and that ability to say, well, how might we? And that is so transformational for an organization and getting them thinking of possibility and flexibility to be able to do this kind of work or whatever comes after it.
Mm-hmm. Yeah, and not only is it so transformational, it's very actionable as well, isn't it? It'll accelerate the learning processes, and in a risk-averse industry, going through training legitimizes the exploration you might do. You know that there's, depending on what you learn, what various courses you go on, or who you speak to. If it's a reputable and kind of valuable source, you know that what you've discussed during those sessions, that's a good place to start, and it's a worthwhile place to explore. And so it can really kind of remove a bit more risk from evolving your way of thinking and increase the potential benefit. So yeah, on that note, thank you once again, Bryan. Thank you for joining us. It's been a super kind of illuminating conversation. Yeah, much appreciated.
Thanks for having me on, Jake.